What's up, everybody? Welcome back to a Liquid FX YouTube video. Here we're going to be breaking down the all-time high on US30 and how you can trade this in the New York session only for great returns. 1 to 3s, 1 to 5s, 1 to 10s. We're even going to be breaking down a 1 to 20 over here on US30 in the New York session, right? So let's get into it. Let's dive straight into the charts. As you can see here, we have our US30 chart open. Now, if we just look at our structure over here from January 22, so just under 2 years ago, what we see is we see a bearish trend in this region here where we got the highs and lows marked out with the black dots. As you can see, we see bearish structure over here in 2022 going into 2023 over here. We saw the breaker structure just over a year ago. Now, since then, US30 has been on the fly, right? We've had two breaks of structure on the daily time frame. So as you can see over here, we had our confirmed shift of structure over here. So this is a confirmed shift. And now since then we've had two breaks of structure, right? And now, by the looks of it, we're off to the moon on US30, right? We've had an all-time high. And we're going to be analyzing how you could have got involved in these trades in the New York session to make incredible returns, right? So that being said, if we now go down to the M15 or the M5, should we say, and we can really begin to dissect our trades in a lot of detail, right? So if we just go here to the left, we can dissect our trades, okay? So essentially, how do we trade, right? How do we trade here at Liquid FX, right? What do we teach and how do we trade, right? Everything comes down to time and price, right? We're time and then we're price. So it's important to understand that these are ICT concepts, ICT 101. Everything is time, then price. So how can you integrate that into your own trading? And this is exactly what we're going to break down now. So what we see here is our trusted Asian range. Now the Asian range will always present itself because the Asian range is a time of day, right? We cannot get rid of the time of day. It's not a confluence. It's not a start trading style. It's a fact on the chart, right? The Asian range is always going to be there regardless of which asset class you're looking at. Here we're looking at US30, whether it's SPY or NASDAQ or ES, even the Forex pairs. These will be on every single time frame, and it's a very, very prominent part of this strategy. So as you can see, we have the Asian range highlighted over here. If I just zoom into that for everyone, we have the Asian range. Now, when we look at the Asian range, you want to ask yourself, what is the purpose of the Asian range? Well, with the US stock markets, as we can see, same with SPY, NQ, US30, the Asian range is a low volume time of day. Now, from this, what we want to understand is that the Asian range, high and low, will be used as liquidity and as fuel. Okay, and this will typically happen in the London session because we don't touch this market in the London session. We allow the London session to manipulate, right? We allow the London session to manipulate the Asian range, and we get it right. So we understand that we're bullish. We've seen the daily time frame. We're bullish, right? So from here, how are we going to get involved? Okay, so the Asian range over here is marked out. Now, quick points on the Asian range, right? Now, the Asian range, we understand that it is going to be 8 o'clock or 20 o'clock. This is New York, so Eastern time, Eastern Standard Time, New York to midnight, right? Oh, midnight. So this is going to be Eastern time, Eastern Standard Time, right? So it's ICT's time, Michael's time, right? So as you can see, we have the Asian range over here. Now what do we see? We see the London session. As we come into the London session, we see price manipulate the Asian low, just like this, okay? We see price manipulate the Asian low. Gonna put that in here, just like this. So we see price manipulate the Asian low, and then we see price manipulate the Asian high. So we see price manipulate the Asian low, and then we see price manipulate the Asian high, just like this. Now, what do we understand from this? Why do we see price manipulate the Asian low and high as we can see? Now, we need to understand that from an AMD perspective, right? London is before the volume kicks in, right? The volume kicks in the New York session because this is the US30. It's the same with ES or E-mini S&P 500. It's the same as NASDAQ, NQ, same as US 500, all these US stock markets, we're expecting the volatility and the volume to kick in the New York session, right? So from that, we have to understand that the London session will be used for what? Manipulation. The Asian session will be used for what? Building liquidity, right? So as you can see, we see the London session manipulating the high and the low. Now the question is, why couldn't we enter just off here? Why couldn't we enter here? So if I break this down, why couldn't we enter off here? Why couldn't we do that? Well, simply put, you have to understand that this was the 8th of December 2023 when this price action occurred, and it's very important to understand that you want to trade after you want to trade after high volatility news events, right? So when we had the NFP, that's at 8:30, that's at 8:30 a.m. Eastern Standard Time, or it is 1:30 p.m. UK time, right? So this chart is at UK time. This is calibrated to UK time. So what we need to understand is that this aggressive move down was NFP. This here was NFP. So the important thing to understand is that this is our Judas swing, okay? Now, why is this our Judas swing? So what makes a Judas swing? The Judas swing is the low of the day, right? The Judas swing is the low of the day. So when we have the Judas swing form, right, we understand that we're bullish, right? We're bullish because the higher time frame is bullish. So what do we expect price to do? What do we expect price to do? We expect price to sweep the Asian low before continuing higher. So this is exactly what we see over here, right? So if I just draw this out, we see the Asian range accumulate price. So this is over here, right? Then we see London manipulate the Asian high and low before giving us our Judas swing, okay? So what we see here is we see the Asian range. We see the Asian range over here, and then we see the Judas swing in this region over here, okay? We see the Judas swing in this region over here. So it's important to ask ourselves, now that we've seen the Judas swing, right? We've seen the Judas swing manipulate the Asian low. We're below the Asian low. Now what do we see? We see a very clean break of structure in this region over here. We see the high from London get broken, whether it's here or here doesn't really matter, okay? So now we've had our entire entry model play out. So we've had our accumulation in the form of the Asian range. We've had our London session manipulate orders, manipulate the Asian low and the Asian high. And now we've had a boss in the New York session. So it's very important to understand it's time and then price. This is why we avoid the entries over here. We avoid selling over here because we're bullish on the higher time frame, so we don't really want to be selling anyway. But it's important to understand that if the volatility kicks in if the volatility kicks in the New York session and we have NFP in the New York session, we must wait for the New York session before taking the buys in line with the higher time frame. That is very important to understand. So if we go over here, if we just label our arrow break of structure or boss, if we just label our arrow here to be a break of structure, what we need to understand now is we've had a break of structure. Now we have an order block, right? We have an order block. Just in this region over here, we have an order block. Our order block is sitting just over here, just like that. Now we have to understand what makes this an order block. We have to understand order block theory. So what makes this an order block? Something we teach, something we go over a lot in the community is that an order block has three things to it that must be there. We have all three of them over here, right? So an order block must break structure, an order block must leave a fair value gap in price, and an order block must be priced correctly. So with these three things, let's go and analyze this order block in detail. So does it break structure? Yes. Because what we see is we see price create a high, create a low, and then we see a break. And this is what we see over here, right? We see price create a high, then a low. Now we've had a break of structure in line with the higher time frame. So our first is a tick. If we go to the second, rule for order blocks, we see a fair value gap in this region over here. So we see a fair value gap over here. This candle here leaves a fair value gap. So if we zoom into price over here, we see price leaving a fair value gap in this region. And the last but not least, what we see is we want to see the order block being priced in the discount. So here we have it just below the equilibrium. So how do we decipher premium and discount? Well, we draw the Fibonacci from the swing low down to the swing up to the swing high. And what we see here is we see price in the discount below the 0.5 level. We see price in the discount. Now with these three things, right, we have our order block in line with the daily cycle, accumulation, manipulation in the form of the Judas swing and the London session, and we have a break of structure. Now from here, what do? With all of our rules met, we have no reason not to take the trade, right? So this trade over here was a lovely post NFP trade, right? We have our stop loss just below. It doesn't have to be down here. It can be down here, but we can have our stop loss just below the order block, giving it some breathing room. And as you can see, this trade could have been exited for a lovely 1 to 2, 1 to 3 trade. And as you can see, with the higher time frame in our favor, it really had potential to rally up. Now, if we go on to the next day, the next trading day, which is actually a Monday, what we see is we see the same cycle play out. It may look differently, but we see the same characteristics of the market, right? So what we see here is we see the Asian high. We see the Asian high and the Asian low in the form of the Asian range, okay? So this is the Asian range, the accumulation phase of the market, right? This is the accumulation phase. Now, what do we see from here? We see the London session, 11:20 London time. We see price manipulating the New York midnight opening price as well as manipulating the Asian low. So this here entices those early sellers into the market, right? The London session, the London manipulation. The New York volume kicks in at around 2 o'clock, 2:30 p.m. UK time. And as you can see, we have another great trade giving us a break of structure in this region. So what we see is we see structure breaking bullish once, filling the imbalance and breaking structure twice. So now we've seen our shift in our structure as well. Very important to understand. And now having said that, we've identified our accumulation, our manipulation, which is the Judah swing over here. And now again, we've had a break of structure in this region over here. Break of structure. So with that being said, we have to identify our order block. Now, what is an order block? We went through it just now earlier. An order block is something that breaks structure, leaves a fair value gap, and is priced correctly, right? So as you can see over here in this region, we have a fair value gap just over here. This is our fair value gap here in this region. So if we just we could place a trade in this region over here, right? Having our stop loss, giving it some sensible breathing room. And as you can see, this was also a great trade that went up to 1 to 3, where it's important to take partials. But as you can see, with the higher time frame trend, it had huge potential. Now, going into today's trade, which is the FOMC. Again, what do we see from here? What do we see from price action? It's rinse and repeat at this point. We have the accumulation, right? We have accumulation or the Asian range over here. Accumulation, Asian range. Now from here, what do we see? Again, we had the London and early New York session manipulate the Asian low and manipulate the Asian high over here. But we understand that we're bullish, right? So this massive move here was FOMC, right? So what can we do? How can we get involved in this trade? So the secret is to understand that why do we see such an aggressive move down when price wants to move up? Well, the first thing to understand is that for the day, it's creating its Judah swing in the New York session, right? So this is 3 p.m. or 3:05 p.m. UK time. So this is our Judah swing, right? This is our Judah swing below the Asian low, right? This is our Judah swing just below the Asian low. Now, what was the purpose of this? We had a break of structure here from the previous day, right? And we had an inefficiency over here to fill. We had an inefficiency, so this therefore is an order block, right? This is our order block from the previous day, just over here in this region. And this is what price mitigated, right? So today's Judah swing actually mitigated a POI or an order block from yesterday. And from here, for those who took this trade, this was a staggering 1 to 20 trade from this order block, right? You can have your stop loss at a safe stop from here. And this trade again had potential for a 1 to 20 in line with the higher time frame. Okay, a nice, amazing 1 to 20 RR trade, I believe this hit 1 to 16, 1 to 17, still running at 1 to 20, I believe. So this is just the power of the accumulation, manipulation, and distribution in detail, right? So this is just the free sort of breakdown that we're doing on YouTube over here. This is just the M5 M5 time frame over here, right? Just to see how you can get involved in the trade, looking at trade 1 from Friday, trade 2 from Friday, and today's FOMC trade, building from yesterday going on to today. So this is how you can use a rinse and repeat model to trade any of the US stocks, whether it's US30, Dow Jones, US30, Dow Jones, ES, S&P 500, NASDAQ. They all follow the same principle, right? And the principle you want to know and understand is that it's time and then price. So we see the Asian range. We're going to see London do some kind of a manipulation. New York typically creates the Judah swing, and we aim to buy off the Judah swing, right? So if we look at the schematic I've drawn over here, everything works from Asia to London and New York, and we distribute in New York. And this here is your classic ICT AMD that can be applied to all the US stock markets. And this is a quick rundown of how we trade here, right? So how we trade at Liquid FX. Everything is a systemized model that you can use in your trading as well. So if you enjoyed this, give it a like, give it a thumbs up, and subscribe to the channel. I look forward to seeing all of you at the next one.